session on the super trade. Today we are going to perform a deep analysis about a very wonderful stock which is also a part of my portfolio, and you can consider this as a disclosure. And please do like the video and subscribe to the channel, because it takes a lot of effort to collect all these data from various sources so that you can make any particular stock as a part of your portfolio and generate margin return in the long run. So without any further delay, let's begin. Today we are going to talk about Tata Elxsi, which is one of the companies belonging to the Tata group. And I'm not going to simply read it out from the PPT. I'll just give you my conclusion. You can pause the video and read out what's written here. So that will help you get an insight into it. So it caters to three different verticals, that is the transportation vertical, the broadcasting and communication vertical, and healthcare device vertical. All right. So if you see the net revenue that it generates, it's consistently rising, and also the return in equity is very consistent. That makes it a worthy candidate for compounding your wealth in the long run. If you look at the profitability trend, also it is consistent, very consistent, and growth also is consistent. Yes, in 2019-20 it came down due to COVID scare, because it caters to a lot of offshore clients in Europe and Americas. So their lockdown happened before it happened in India. So it vertical mix, you see around 10.4% of its revenue. It, it is generated from medical device and healthcare services, transportation 41%, broadcast and communication 44.3%. The countries it caters to: Europe 36%, USA 36%, India around 13%. Row countries, that includes countries like Australia, Brazil, Argentina, Canada, India, Mexico, Russia, South Africa, Switzerland, and Turkey. It caters to around 14.4%. Now, in the transportation vertical, its client includes Jaguar, Land Rover, Toyota, Nissan, Isuzu, Hyundai Mobis, Panasonic, and so on. And in the broadcast and communication vertical, its client includes Comcast, Sky, Liberty, and Google. Is going to play an important role in semiconducting, in 5G services development and research, wireless network, set-top box integration, and so on. In the medical and healthcare device, its client includes ASQ Hitachi, Becton, Dickinson, and Philips, and so on. So healthcare devices, whether it's a scanning machine or MRI machine or a Doppler or a ultrasound, that require sophisticated software. They require, and the research and development in the medical field, the medical science is going to continue to grow with new diseases and new improved way of surgery and analysis, and medical trials and clinical trials. All right. So in the automobile industry, you see one of the Volkswagen CEO, he said that car is becoming a software product and will work like smartphone. This change will be more challenging than the change in the electric cars. Of course, you see here it's given the trend. This data is picked up from the Volkswagen side. You see the lines of code that is required by the vehicles right now. I know it is significantly increasing. 100 million lines of code per vehicle, approximately $10 per line of code is the revenue the companies can generate. For example, Navi system has 20 million lines of code, and it requires more lines of code compared to some of the companies like Facebook or Linux or Google Chrome or Android that it generates. Tomorrow it is expected, I mean in future it is expected to grow to 200 to 300 lines of code, I expect. And for level 5 autonomous driving vehicle, it will take around 1 billion lines of code. It means the car will become more intelligent, just like the smartphone created a revolution around the world. It is the time for the automobile industry, the electronic vehicle industry, and to create this kind. Now, car buyers purchase decision, you see moving now. All these data have been a research done by various companies. That's how the data has been statistically has been proven and expected to follow the trend. Whether it's engine size, horsepower, gas efficiency, now the car buyers wants a digital experience, user interface including touch screen in your car, voice recognition, seamless connectivity, intelligent safety return features, GPS guided navigation system, and so on and so forth. Software updates are playing a critical role as battery lifespan increases. Every now and then Tesla comes up with a battery update to enhance the experience for the car owner, and it will result in lower depreciation of the electric vehicle cars compared to the internal combustion vehicles. You see the car penetration, as we have seen, between China, US, Europe, Japan, and others, that it is going to grow at a rate of, I mean, around 36% CAGR, that is too good. Even if it generates, if a company generates 20% or 18% of CAGR, it is going to compound your return in the long run significantly. And you see the penetration of the sales trend for this car. These are the actual trend which has been taken from the past data, is consistently rising. And Telex vertical, you see the slowest growing vertical of Telex is growing faster than its peers. Who are its peers? You see only during this time it has come down below, but since then it has been above its peers mostly. And LTTS is one of these companies, which is again one of my favorite stock. We'll talk about it in some other video. And it's Telex basically is Tata Elxsi. Those who are wondering who is Telex, Tata Elxsi. It has partnership with Google Wine, and it's going to provide a lot of services to the OTT content providers. All right, like Netflix, HBO, Disney, Hulu, Amazon Prime, Geo, Warner Brothers, and so on. The network and broadcast communication and media, there is a big room to play for companies like Tata Elxsi, which very sound fundamental. And you see in the broadcast communication vertical revenue trend of Telex, yes, it came down a little bit between the 2020 and 21 quarter, but since then it has been consistently rising. And global OTT revenue trend, it has been shown estimated to be in 2025, estimate you see to increase to $167 billion, the entire industry I'm talking about, right? So supported by low cost of delivery, you see the lowest it is, the better it is. One of my other favorite companies, LTTS, as I've told you. But the cost of operation is, it decides the operating profit margin for the companies, and lower it is, the better it is. So employee retention is high, attrition is low, and so the expenses per employee is quite lower compared to many of its competitors, many of its peers. Higher offshoring revenues, highest, you see, if you compare the offshore revenue of Tata Elxsi, it is way high. I mean, it is higher than any of his peer that you can see. The places to which it caters to in US, so many states it caters to. In Europe, you can see this country. You can pause the video and take a look at it. And so it has got a strong sales presence in the on-site delivery. Outperformance in US geography, you see North American revenue is increased by 20%, compared to many of its competitors. Right, now let's look at the screener here. So if you look at the screener, all right, its PE ratio is 85.6. This is the 85 times of its earnings, which is very, very higher, but doesn't matter. Once the income of the company, earning of the company increases, it will it will it will become balanced. So ROC is 47.7%, ROE is 37.2%. That is a good takeaway for the company. And you say only thing is, the con is that stock is trading at 29.38 times of its book value. If you look at the profitability trend, you see the sales is consistently rising. But let's look at the the profit, net profit. Is it rising? Yes, you see along with the sale, the profit is also rising consistently. And if you look at the operating profit margin, it is also consistently increasing. These are three important things that you must look. Let's look at the borrowing. Borrowing was nothing, but now it is 138 crore. But that's nothing compared to its profit. If you compare the profit around for a year, 300 to 400 to 500 crore if it generates, so even 1 year of profit will be enough to take care of all its borrowings. Here borrowing is not much, so nothing to be afraid of. And you see the cash, that is again one more important thing. It's a cash generating business. So you see here how the cash from operating activities is consistently also increasing. If you look at the shareholding pattern, promoters holding has been remained consistent. FIIs have recently, they have also increased their stake recently in 2022 March. DIs have unloaded bit of it, but that's not a red flag for any company. Now let's look at the technical chart. You see the technical chart. This is, now it is nearing its support level, but what you can do is you can buy here as well. If it falls down further in between 67231 or 6476, you can add another. And if it further falls, you can add another, because we don't know when the market will go up. So if the market will go up, the good stocks are the ones that will go up faster than any other. That's why I have marked these positions. You can pause the video and take a look at this, the support zone. And moreover, many of you say, sir, it's a very expensive stock. Doesn't matter, it's expensive because it belongs to a good company. It's not because it's not like Adani Green, wherein the huge speculation is going on, even though the company is deep neck into debt. So you see here, if you would have even purchased one equity share, it would have doubled up your return. All right. I had expected it to rise 10,000, as I posted in my Telegram group. It almost touched 10,000, came down. My expectation is in the next 4 or 5 years, it will touch a price of around 15,000 to 20,000 easily. So even if one share or two share you are buying, that's worth it, because at the end of the day, one share if you buy, let's say for example today, and maybe the price may come down, but if it increases to 10,000, 12,000, and which is going to increase because there's a rock solid fundamental stock which is a part of my portfolio, so it is going to give you, even on one equity, huge amount of return. All right. So in the end, I would say please do subscribe to the channel and like the video. That will keep me motivated to come up with even more fundamentally good stock with an analysis of it. Thank you.